Over the past week, the price of silver has risen over 5%. Now, a couple of factors behind that has been the softness in the US dollar, which has fallen to roughly a 1-month low, and also the pullback in US Treasury yields as market participants begin to question, have we now moved past peak aggressive tightening for central banks, most notably from the Federal Reserve? Now, while expectations are for a hike of 75 basis points next week, the focus really is on that December meeting, which therefore will have an impact on the outlook regarding silver. Hello and welcome to the channel. My name is Justin McQueen of Capital.com. Before we begin, if you like the video, then please do give it a thumbs up. It would be greatly appreciated. And also, if you want to add to the debate, then add your comments in the chat section. It's always good to hear from other people's views and forecasts. And if you want to see more of our videos, then please do subscribe to the channel. Now, with regards to silver, one of the big factors that has been weighing down on the precious metal and also gold, despite the fact that we've seen multi-decade high inflation, has been the US dollar, which has hit multi-decade highs and subsequently been a major factor behind the pressure we've seen under these precious metals. Now, over the past couple of sessions, we've begun to see a little bit of a correction in the US dollar, falling to 1-month lows. Its major counterparts, such as the euro, has broken above its downtrend that's been in place since February of this year, and also the 55 DMA, which has been a moving average, which has ultimately defined this trend over the last couple of months. So again, a big factor as to why we've started to see a bit of support for silver and also gold is that pullback in the US dollar. And by extension, this has also been a factor that's been in play with regards to US Treasury yields. Again, it's pretty much the same trade between the US dollar, US Treasury yields. And so therefore, when we've seen a pullback in the US dollar, it's largely coincided with a bit of softness in US Treasury yields, which is what we've seen over the past week. Reminder, last week, we did see the benchmark 10-year hit roughly at 4.3%. We did dip below 4%. We're now currently trading roughly around about 4.05%. But ultimately, the trajectory has begun to, say, hit a bit of a speed bump. And ultimately, that's allowed for equity markets to push higher, gold, silver to push higher, and also the dollar's major counterparts beginning to reverse. Now, of course, the focus going forward will be on the Federal Reserve next week. A reminder that it is pretty much nailed on that they will be raising interest rates by 75 basis points. For therefore, that is not where the focus will be. The focus will be with regard to their commentary surrounding the December meeting. A reminder back to last Friday, which really sort of kickstarted this rally and this underpinning in the likes of silver and equity markets, had been on that Wall Street Journal piece from the Fed whisperer, Nick Timiraos, who stated that while the Federal Reserve will be raising interest rates by 75 basis points at the November meeting, they could begin to signal a move towards a slower rate hike towards 50 basis points at the December meeting. Now, the reason why this is important is because at the time before that was released was that markets had been 75% priced in for a 75 basis point rate hike at the December meeting. We're now currently, last time I checked, was around 43% probability of a 75 basis point rate hike at the December meeting. And the most likely scenario at the moment is a 50 basis point rate hike, which ultimately, given that sort of dovish repricing, we've started to see more support for silver prices. Ultimately, silver does still remain in a bit of a broad range of $18 to $21. So technically, the outlook's still pretty mixed, and really we'd need to see a break and a close at least above 20 for bulls to get a little bit excited with regards to silver. Now, while we started to see some Fed officials also moving towards a bit more of a dovish bias, most notably from Fed's Daily, who stated last week, which really just sort of exacerbated the move higher in silver and the softness in the US dollar, stated last week that the Federal Reserve, it's now time to start talking about slowing the pace of rate hikes. And well, we've also seen similar from Fed's Brainard as well. Reminder that Lael Brainard is the vice chair, and previously she has stated, at least over the last 2 weeks, that the Federal Reserve need to sort of be a bit more cautious with regards to the rate hikes that have already taken place and the impact they're having on some of the rate sensitive sectors, most notably the housing market. Of course, second-tier data from the housing market over the last couple of days has begun to soften, and that's really sort of fueled that narrative that the Federal Reserve could start to slow down the pace of rate hikes. So this is the big narrative at the moment. Of course, we'll see whether that is confirmed at next week's meeting. If not, then of course it's likely we'll see renewed upside in the US dollar, a push higher in US Treasury yields and silver, gold, equities will pull back. So again, that's why this meeting next week is very key. Now, while we've seen the reports from the Wall Street Journal and also Fed officials beginning to sort of shift their bias, ultimately the main determining factor as to whether the Federal Reserve will be allowed to do that is the economic data. Now, of course, we've seen some of the second tier data beginning to soften, but it's really that non-farm payroll report and inflation in particular. A reminder that last month's inflation data did print above expectations, and hence why we've got a 75 basis points nailed on. And we did have the most likely scenario of a 75 basis point rate hike at the December meeting. So if we see data begin to soften, then it's more likely or not that we will be going towards 50 basis points, and that can allow for a bit of a year-end squeeze higher in equity markets and a push higher in silver prices. So again, that is the main focus, the data, which will, whether that's softening, which will fuel the softness in the US dollar, and by extension, we'll see silver prices push higher going forward. Now, in terms of a couple of levels to watch out for, particularly on the top side, so the psychological level of $20 is largely just a round number. That would probably be your initial upside level to watch out for. We break and close above there, then I think the 200-week moving average at 2082. This will be key, because if we manage to close above there, then I think technically that does provide a bullish signal, and we can therefore start looking towards the October highs at 21.20 and also push towards the $22 per ounce mark. So again, 200-week moving average is pretty key there, because it has capped some rallies over the past couple of weeks. So that's definitely something to watch out for. Now, in terms of support, the 55 DMA does sit at 1917. So again, 1917 for that 55 DMA, just below there, which is really just a cluster of lows over the past couple of weeks, is roughly around about sort of $18.20 to about $18. But we'll call it 18.20. If we do close and break below there, then really you're looking towards that year-to-date low of 17.55. But one thing I would say is that at the moment, the bias is probably mixed. I'd think that traders are beginning to get a little bit cautiously sort of bullish with regards to silver and also gold as well. Because if we are now moving past peak hawkishness, then ultimately the downside begins to look a little bit limited going forward, and we can start to push higher. Now, as we can see in terms of that daily chart, and as I mentioned, we have been trading within a relatively broad range from about $18 to about $21 being the high of that recent range. Again, pretty mixed at the moment. We are finding a little bit of support, and as you can see, that Friday candle on the back of that Wall Street Journal suggesting that the Federal Reserve could be slowing the pace of rate hikes towards the end of the year, and accompanied with some of those dovish commentary from Fed's daily. That's really sort of pushed silver higher, but ultimately we haven't done an awful lot over the past couple of sessions. So again, we are seeing a little bit of support with some of the DMAs, but the view would be negated that we could be seeing some upside towards the end of the year if we were to see a close below $18. And as you can see, if we take this to the weekly, why that's been quite significant, because we did see a bit of a cap in terms of the highs back in 2020. And so this has been a key area of resistance and now support. So again, if we were to see a break below there, then we'd be looking to much lower levels towards sort of $17 and maybe even $16. But for now, I think we do hold that area at the moment. We are starting to see a little bit of a change in terms of the fundamental outlook, a bit of a reversal on some of the dominating trends over the past year as well. So I think we are for good grounds to start to see a bit of a squeeze higher towards the end of the year. And the reason why I say the recent highs around the October highs of 21.20 is quite significant on the basis that we do have that 200-day moving average. So again, if we were to close above there, then we'd be looking up to around $23 for the price of silver going forward. But again, we need to see that data starting to confirm that there is good grounds for the Federal Reserve to slow the pace of rate hikes and therefore move away from peak hawkishness with regards to monetary policy. So just to recap, in terms of the main factors at play, all eyes on the Federal Reserve meeting next week, particularly with regards to that outlook on December, because if they do signal that they will be slowing the pace of rate hikes, then we could start to see a year-end squeeze higher in silver, as this would likely be accompanied by a softer dollar and softer US Treasury yields. Thank you for watching today's video. My name is Justin McQueen, and good luck trading out there.